All right, good morning, folks. Tim Davis coming to you guys again with another video. And this one is going to be analyzing crude. And I want to analyze crude oil from a couple different time frames. We're going to take a look at the 4-hour time frame, the daily and the weekly, just to show you guys what crude is showing us. So here's a 4-hour chart of crude. One thing we know for sure is that it, just like the markets, has been in a downward trending channel with in a downward trend for quite a bit, for probably the bulk, or probably since around, say, February. We were hugging around this 200-day moving average, as you can see right up here. Dip below it here. So we dip below it here, and once we cross below the 200-day right here, the crude just continue this trajectory down. Got around about 75 here, and we started to rally again, back up above the 200-day moving average, but then failed back below the 200-day moving average, and we've been below the 200 moving average since on this 4-hour chart. Now, fast forward, crude had a major dip, and I told you guys before, prices does not like to be too far away from moving averages. So as crude started to fall this time, it started to create a gap in between the 200-day moving average and the 50-day moving average. Wide gap. It closed the gap between the 50-day moving average right here, and then price action actually crossed, and now it has closed the gap between the 200-day moving average. So what next? It got as low as 65 right here, back around the middle of March, around March 20th or 18th. And price action moving right back up. We have the 20-day period moving average crossing back above the 50-day, but we have to contend with this 200-day moving average, which is why you see a cluster of candles starting to cluster here. Has to contend with that. And that's right around 75 bucks, which is where we saw right back around here. So we're back around very close to 75 bucks. We're just below it. So crude is right now trading around 73.80. Could we go up a little bit more? We could. Look at what's happening though in the oscillators. We're showing overbought territory in an extreme way. Well, not too extreme, but it was as high as the RSI got as high as 80. Got as high as 80 on Monday. RSI got as high as 80, and I'm looking right down here below in the RSI, looking at the oscillator right down here. We got just about 80, level about 80 on Monday. So that's an extreme high RSI. Anything above 70 is considered overbought. So right now we are in the overbought territory on RSI. We're in the overbought territory on full stochastics. We're in the overbought territory on the REMS percentage. It's on the 4-hour chart. And after you're in overbought territory for so long, as we were back here sometime last week, price tends to fade. It doesn't mean it would sell off completely, because as you see here, this is the area we were overbought. We just became stagnant for a while, and then we dropped just a little bit here before we rose again. Now, that's why I like to look at multiple time frames. And let's see what the daily chart is showing us. So we're right here, currently pressing on the 200-day moving average on the 4-hour chart and overbought. I keep saying over. So in overbought conditions, we're in overbought conditions, overbought conditions. Now, let's see if there's space for continuation on the daily chart. Because we could pull back here a little bit, and go back here, because we could pull back here somewhere and touch this lower level of support right around 70, and that will push us right back towards the 50-day moving average. But let's see what the daily chart is showing us. So here's our daily chart, and voila, what do you know? So point out a couple of things here too as well. So daily chart, price action shows this downward trend. We have the 20 period crossing back below its 50-day period right around March the 13th. Then we see that big dip. Then we see a push higher. Look what's happening now. 20 period moving average is pulling away from its 50-day moving average. That is not a positive signal for crude oil for the long haul. Now we have this 20 period moving average, which price action is very close to, and the 50-day moving average, which price action is going to have to deal with. And its 50-day moving average is, guess what, right around that $75 level. So somewhere between here, crude could see some major resistance, and struggle to break above this 50-day moving average and come right back down. We are showing some overbought territory in the RSI already. I'm sorry, in the Williams percentage already. Okay, full stochastic is still trending higher. RSI still trending higher, but starting to flatten out. So crude is showing us that it is in the area of some resistance right now. So we're starting to see this upward movement starting to settle or fizzle out. So that's what we got to pay close attention to the rest of the day and the rest of this week, that crude is definitely coming into an area of resistance. So until it punches right through all this resistance, folks, it's going to struggle. So we need to see crude get well above 75 and start to approach 80 for it to have a, for us to confirm any type of breakout of this resistance level, or breakout into a strong upward trend. Has to break above the 50-day moving average on a daily. Daily is a must, and start to push towards 80. So right now we're still around on 73, 73.80 somewhere. And we got to see if we start to pull back from this level, because we're in an area of resistance right now, and we're in overbought territory. If you look at the weekly chart, definitely show signs of some struggle. We started to consolidate after we pulled back from those highs that we've seen back in February of last year. We got the 20 period moving average crossing below the 50 period moving average back in October of last year. And we've seen that the 20 period moving started in a weekly started to act as a level of resistance. See, every time price action on this weekly chart got up to the 20 period, it pulled back. And where are we now? Almost right back at that 20 period moving average again. So crude is still not out of danger yet. It has some hills to still climb. So unless crude start to break in a major way, we really need to see crude push above 75, and then after it pushes above 75, we need to see it break back up towards 80 for it to get out of the woods. Right now, crude is still not out of the woods, even with the short-term push that we see right now. It's not out of the woods yet. So keep that in mind. It is starting to run into some strong areas of resistance. So it could reverse course at any point now. So keep that in mind. Crude is definitely in an area in some force. Pushing on levels of resistance as we speak. All right, wanted to point that out in reference to crude. All right, folks. Hopefully I'll be back with another video, since I'll probably be monitoring a lot today, because we are right around some crucial levels of support resistance on the major indices and in crude and in the VIX. So be watching carefully today.